Hi, it's David Bromley here again. I just want to pick up on where I left off in the last video, and I was talking about step one of best trading practice, which is finding an edge, and try and relate some of this to steps 2 and 3 of best trading practice, which are staying in the game and allowing compound growth to deliver your fortune. New traders often talk to me about comments that they've heard, or experts have made comments to them about the trading system not really being that important, and that what's more important or most important is the way that you manage trades. And this does sound strange, and I can remember this being said to me when I started. And I think to try and clear up what really experts are talking about, when they talk about the system not being that important, what they're really referring to are the elements of the complete trading system. And you'll remember, if you watch the earlier video that's also on the blog about the 7 elements of a complete trading system, the 2 elements that relate to when you get into the market and when you get out of the market, when you enter and when you exit trades. And there are only 2 of the 7 elements. And certainly there are any number of ways that you can do this. And in the old days, the way that we used to try and determine whether an idea for entering and exiting the market had any merit was to look at something called expectation, which is a concept borrowed from probability theory and is prevalent in game theory. And it simply means, and I'm not going to go into all the details of it, but it simply means that if you have a game, for example roulette or the flip of a coin, or trading, if you want to think of that as a game, where you know the probability of a positive outcome and the probability of a negative outcome and the average return for a negative and positive outcome, then you can calculate what would be the average return for each spin of the wheel or flip of the coin or trade. And if that average return is a positive return, positive average, then that system can be described as having a positive expectation. And it's only a trading entry-exit method with a positive expectation that can be taken on, and using steps 2 and 3 of best trading practice by managing your risk, allocating your assets, position sizing to maximise your reward, can you manage those trades into something, well, eye-watering, potentially. And so what the experts mean in this case is that your real financial destiny is more related to steps 2 and 3, how you manage the trades, than it is the particular way of entering and exiting the market that you select. But with this one caveat, that the way you select to enter and exit the market must have this positive expectation associated with it. Now, thankfully, like many other things in trading these days, you don't have to do what I and other system traders had to do years ago and look at using pretty kind of basic tools like Excel or something, look at individual trades in a market and count them up and work out whether they had what was the average return, what was the average win, the average loss, probability of a win, etc. And then try and calculate whether the system has this positive expectation. Because actually, if you run a test in a good and comprehensive piece of testing software, you'll know if it had a positive expectation, because you'll make a profit at the end. But you'll be running a test of the whole 7 elements of your system at once, rather than these entry and exit elements. So I hope that's kind of made it a little bit clearer rather than less clear. But as always, if you've got any questions, or any parts of it you're not very clear on, then I'd always be delighted to hear from you. I'll be taking in the next couple of videos this subject on and looking in more detail at the way that you manage trades to turn these systems or entry-exit methods with merit into eye-watering profits. So stages 2 and 3 of best trading practice. So thanks again for your time, and I'll speak to you and be in touch with you soon.